Welcome to a new video. This is a short illustrative video on impairment loss of a non-monetary asset measured in a foreign currency. It deals with two standards. You can see standards involved. Number one is Ind AS 21, the effects of changes in foreign exchange rates. Another one is Ind AS 36, impairment of assets. Next. Decoding currency types, currency, money in use in a particular country. Accounting is a measurement process and currency is the basic unit of that measurement. That means currency is the basis for measuring accounting data for the preparation of financial statements. There are two types of currencies, one is functional and another is foreign. Functional currency is the currency of the primary economic environment in which the entity operates. The functional currency influences the underlying events, transactions, and conditions that are relevant to a reporting entity. That means functional currency is the initial measurement currency for the preparation of financial statements. In India, functional currency is rupee. UK functional currency is pound. USA functional currency is dollar. Second thing, foreign currency. Any currency other than the entity's functional currency. So, from any point of view of any business unit, any functional currency of a foreign country is a foreign currency. That means what? It is the money from a currency other than its own. In India, functional currency is rupee. What are the foreign currencies? It can be dollar, it can be pound, it can be euro. Next, impairment loss arises when carrying amount is more than the recoverable amount. The recoverable amount is the higher of fair value less cost of disposal and value in use. What is carrying amount? Carrying amount of an asset. What is that? It is the amount at which an asset is recognized after deducting accumulated depreciation and accumulated impairment losses thereon. What is recoverable amount? Higher of fair value less cost of disposal and value in use. So we need to know what is fair value less cost of disposal, what is fair value, what is cost of disposal, then what is value in use. Now, fair value, it is the current exit price from the perspective of a market participant. That means the price that would be received to sell the asset, irrespective of whether the reporting entity wants to sell it or retain it. What price it can expect from selling the asset. Now, we have to see what is cost of disposal. Cost of disposal is simply costs to bring an asset into condition for its sale. That means all incremental costs directly attributable to the disposal of assets. Example, it can be transport cost, it can be legal expenses, but it will not include finance cost and income tax expenses. So impairment loss will arise only when the carrying amount will exceed the recoverable amount. The recoverable amount is the higher of fair value less cost of disposal and value in use. Now, what is value in use? It is the present value of all future cash flows that is expected to be derived from the asset. So if the entity decide that they will sell the asset, they will take fair value less cost of disposal. That is one value. Another value is what? Value in use. if the entity decides to retain, what is the cash it can generate from the asset? What are the cash flow that can be derived from the assets? So higher of these two is the recoverable amount, that is compared with the carrying amount. When the carrying amount is more than the recoverable amount, there is impairment loss. Suppose carrying amount 10 rupees, recovered amount 8 rupees, 2 rupees is what? Is the impairment loss. That will be recognized in profit and loss. And the new carrying amount will be the recoverable amount. I repeat, carrying amount 10 rupees, recoverable amount 8 rupees, 2 rupees is impairment loss, 10 minus 8. And the new carrying amount of the asset will be 8 rupees. That is the carrying amount of the asset. Next. Measurement of impairment loss in foreign currency for a non-monetary asset. First of all, we need to find out two things, carrying amount and here you see. Next, recoverable amount. Carrying amount translated at the exchange rate at the date when that amount was determined. Thing is, when an asset is acquired, cost is the carrying amount. Thereafter, carrying amount is what? It is the cost less accumulated depreciation and accumulated impairment losses. So we want to find out what is the carrying amount at the date when the asset is tested for impairment. Okay? So this is the amount we talk about. This is entity specific, nothing to do with the outside world. My cost less accumulated depreciation, accumulated impairment losses thereon. So what is the carrying amount at the date when the asset is tested for impairment? Second thing is recoverable amount translated at the exchange rate at the date when that value was determined. This is the amount, this is the value. What is the fair value less cost of disposal, or what is the value in use? That is ascertained. Here the amount is ascertained, here the value is ascertained. First thing is we follow what? We follow historical cost. Everything is measured at historical cost. And here the value is determined when the asset is tested for impairment. It can be the closing rate. So these two are compared, as you know, carrying amount and recoverable amount. Now we take some examples to make the things understand. First, you see, there is one entity, currency rupee, purchase machinery from entity Y, currency dollar at $20. Exchange rates given, transaction date is $1.80, reporting date is $1.75. Now the life of the machinery is given 10 years and they follow straight line method of depreciation. That means for 1 year, depreciation will be 1/10 of the cost of the asset. What is the cost? It is rupees 1,600. How do we get? Purchase for $20, exchange rate is $1.80. So cost in functional currency it is 1,600. Now recoverable amount in foreign currency is 18. It was acquired for $20. Now it is $18. So what is the recoverable amount of functional currency? It is 1350. How do we get? You see, 18 into that exchange rate $1 is 75. So cost is 1,600. Recoverable amount is 1350. Now cost of the asset is 1,600. Depreciation under straight line method, life 10 years. So depreciation will be 1/10 of 1,600, that is 160. So what will be the carrying amount before impairment? 1,600 minus 160, that is 1440. So impairment loss is carrying amount at the date when it is tested for impairment 1440. I repeat, 1,600 minus 160, and recoverable amount is 1350. Difference is 90. So carrying amount of the machinery is 1,600 initial cost, 160, 1/10 is depreciation, 1440 is the carrying amount which is compared with the recoverable amount of 1350. So carrying amount is more than the recoverable amount by 90 rupees. So 90 is the depreciation. So new carrying amount is the recoverable amount, that is 1350. So the impairment is 90. Carrying amount is more than the recoverable amount. Next, effect of comparison between carrying amount and recoverable amount. Impairment loss may be recognized both in functional currency and foreign currency. It can be recognized in functional currency but not in foreign currency, or it could be recognized in foreign currency but not in functional currency. We take examples for all these three scenarios. Scenario 1, impairment loss recognized both in functional currency, that is rupee, and foreign currency, that is dollar. Carrying amount is $50 when the rate is $1 is 80. So value in functional currency is 4,000 rupees. And recoverable amount of that is $47. Rate was $1 is 83 rupees. So value is 3910. So functional currency, foreign currency, carrying amount is more than the recoverable amount. So you see, foreign currency carrying amount is 50, recoverable amount 47. So impairment loss is 3. And under functional currency, carrying amount 4,000, recoverable amount 3901. So 99 rupees. So impairment recognized both in functional currency and foreign currency where the carrying amounts are more than the recoverable amounts. Next example, impairment loss recognized in functional currency but not in foreign currency. You see the same carrying amount taken, asset $50, rate was $1.80 rupees. Functional currency value is rupees 4,000. Recoverable amount is $51. Rate is $1 is 78 rupees. So the value is 3978. So there is an impairment loss in functional currency. You see, 4,000 is more than 3978. 22 is the impairment loss. But you see, in dollar, foreign currency, there is no impairment loss because recoverable amount is more than the carrying amount. Third scenario, impairment loss recognized in foreign currency but not in functional currency. Same thing, carrying amount $50, rate is $1 is 80 rupees. Functional currency value rupee 4,000. Recoverable amount is dollar, it is 48. Rate is $1 is 85 rupees and the value is rupees 4080. So it is impairment loss under foreign currency. Carrying amount is more than the recovered amount by $2. But there is no impairment in functional currency because recoverable amount 408 is more than the carrying amount of 4,000 rupees. So there is an impairment loss in foreign currency but not in functional currency. Thank you. For more videos like this, please visit indaisedu.com.